Next up is going to be Michael Costa. He's going to be discussing facilitating solutions for global carbon markets. Michael Costa is Chief Executive Officer at Base Carbon, whose work and decades of experience in the environment, finance, and technology sectors involves providing innovative solutions from risk portfolio management to project development within the carbon economy. Michael's career includes 20 plus years of experience in finance, including lead buy-side roles for firms such as Goldman Sachs, where he spent 10 years and led the firm's special situations group in Canada. He also worked at UBS and held investment roles at a family office. Over the course of his career, Michael has built and led multiple investment platforms and sourced, structured, and executed many public and private debt and equity principal investments. Welcome, Michael.
Hello, everyone. Thank you. Thank you, Peter. Thank you for this forum, and thank you for everybody in attendance. This is really, it's really exciting. And as David said, there's a lot of, what's really interesting to me as a capital allocator in my role now, and also my career prior, is how many different parts of industry, expertise, science, academia, business need to come together to not only meet net zero, but when you think about carbon, which is what we're focused on at Base Carbon, to be able to make these ventures work, it's such a patchwork, and I think it's really important. So sorry, the timer's not going, gentlemen, just so you can. I know you're going to hold my feet to the fire, so I want to at least know when the fire's coming at me. So after that nice little interlude, so Base Carbon, I want to keep it fairly simple for the room because there's been a lot of big ideas today. We're a simple company. You know, we're a public company. We trade both in Canada and in the US on the OTC. We're fundamentally a capital allocator. We're a capital allocator to the upstream voluntary carbon markets. So most of the businesses today and most of the folks in this industry are either going to be a capital consumer or they're going to be a capital allocator. We're both. You know, we provide that role of sitting in the middle, and we really view ourselves as a really humble and simple business, providing capital to these projects. Hey guys, it's really distracting. I'm sorry. Thank you. Sorry. I guess some of the other speakers didn't have the gall to do that, but I will. So for us, we've raised $68 million of capital, Canadian dollars to date, into this venture. We're about a year and a half old, and we've allocated that capital, or the vast majority of that, into upstream projects. The primary focus within the business has been household device projects. We're spending a lot of time on nature-based solution. We're spending a lot of time on technological solutions that are out the curve. The fundamental question, though, becomes, well, why do we do this, and why did we, all as people and as a business, choose to do this? And I think that Dave used the word provenance, and so I'll steal your word. I think that that's really, really, really important. For us, we spun this business out of Abex Technologies, which is the parent company of Abex Exchange. I was a co-founder of Abex Technologies with a group of gentlemen back in the day. And Abex kept getting asked repeatedly, you're building these exchanges, but what about carbon? You're focused on LNG and energy transition. What about carbon? We started doing a lot of work on the carbon markets, and we saw a great opportunity, certainly in the exchange side. And as you heard from Dave and Abex, which they're focused on, we saw a great opportunity in the upstream. I've spent my career allocating capital and a lot to extractive resources and natural resource businesses. When we spend time on the voluntary markets, carbon in general, but the voluntary markets, the gap in that gulf between the capital allocators, those that had capital, and the people that needed capital, the projects, was wider virtually than anything we've seen, which is evidenced by the early stage nature of this industry. And you've heard that from a lot of the speakers today. So for us, being able to sit in the middle, adjudicate that gap, earn the risky but the expected return of that is a really interesting and valuable place to be, both for the returns of the capital for our shareholders, but also for the maturation of this industry and as carbon and voluntary carbon as part of net zero and as part of energy transitions from a OTC market and somewhat of an opaque market to a commodity. When we thought about how we wanted to build this business and where we had edge. As an investor, you always think about, or at least we always thought about, where do we have edge and where do we have durable edge? What do we do differently? Where do we actually have an opportunity because of how we're set up, because of our expertise to outperform? Within carbon and within this business, there's a couple of key parts that were really important to us. The first is the permanency of capital. Being a public company, there's other structures and markets that allow for permanency of capital. But as a public company with public equity capital, that evergreen capital is really important, especially when you're thinking about underlying durations of projects that on the short end, when you think about household devices, 7 to 10 years, to the longer end on some of the nature-based solutions, upwards of 30 years, that permanence of capital is really, really important to us. And then the second is sizing. We heard earlier today from two of the largest asset managers in the world, and they denominate things in, with billions. Those are big numbers, and there's just not the breadth of project right now in the voluntary markets to support that big of capital into the commodity side. We're not in the $10,000 range, but you need to have a portfolio and a platform that's both sized to the capital allocations that are out there in the marketplace today with attractive risk reward and attractive knowability, but also that can flex and grow with that marketplace as it grows. And we think that the platform we have affords that sort of Goldilocks zone of being able to be sized properly, and sizing is so super important. And then the final piece is expertise. For us, there's two parts of expertise that are crucial to this business. And when we looked at the marketplace as we were evaluating building base, 2.5 years ago, the people that had one didn't have the other, and vice versa. And there's the financial expertise, and then there's the carbon expertise. And we really married those two portions of expertise in our business. We came across a lot of great carbon boutiques, people with great voluntary market experience, project experience, but they really didn't understand allocating capital because it really wasn't what their background was. They're project experts, and that's a good thing. And then we saw a lot of folks from our industry, people that had either sat as portfolio managers or investment bankers or folks within the corporate side that saw a large opportunity in carbon, but they had no idea how to actually execute a carbon project. They didn't, there was a lot of knowable unknowns that they didn't have the expertise to know. We really married those together. And then with the overlay of, we've all sat in C-suite roles or similar to C-suite roles, we've all sat on boards. And so there's really nothing in this business that we haven't done before. And for us, we feel like it's a really unique place and a really, one-stop shop, but really a manner of which approaching the voluntary markets that allows, as I said before, for that growth. So fundamentally, like, what are we doing? As I said, we've raised a properly sized amount of capital for the first iteration of our portfolio. We've allocated it primarily into the household device side. We have two main projects. We have a project in Rwanda. We have a project in Vietnam, both household devices. So think clean cooking devices or water purifiers. Quick show of hands, who knows clean cooking devices? 2/3. It's a good thing. Thank you. For us, there's so many great ideas and there's so many great technologies, both in terms of some of the monitoring stuff you've heard today, and also on the technological side in terms of methodology. But on the same token, those are out the curve, even on the nature-based side, which is a huge focus in our business. We've announced a partnership with the Danish Red Cross for a blue carbon project in Southeast Asia. We're spending a lot of time on effectively an ARR project in Southeast Asia. We love that. And that is we strongly view that to be the future of the voluntary markets, but that is the future. And as a public business, we have a responsibility to our shareholders to turn our capital and to turn our balance sheet quickly and thoughtfully. And we also see a really big gap in the market whereby everybody wants removals. Who would, if you had abatement versus removal, who would want abatement? Not many people. It's a higher quality credit, and we recognize that, we see it, we acknowledge it, and we're building our business accordingly. But on the same token, there's a huge gap in the marketplace in terms of physical delivery into net zero commitments that are approaching like a freight train, especially the 2030 net zero commitments, that there's just not the quant of supply that's needed on the removal side and then on the tech side to get there. So it's what is the bridge, what is the life raft, what is the limb for us as an industry to get to that point in time. And we really believe that the household device side is a really important part of that toolkit for this industry to get there. Secondly, for us as capital allocators, you think about any of the macro prognostications around the sizing of the voluntary market between now and 2030. About, give or take $1 billion right now. On the low end, you're talking about a market that's like 25, 30 billion by 2030. Third-party numbers, everybody's read the same research, sees the same, big fancy names out there. That's like half the size of the global nickel market. So if we raise capital, invested in much longer duration projects, let that season, we had the best capital in the world, the best projects in the world. We could get it right, but also get it wrong relative to how an investing platform is set up within this industry. So that duration of capital and the turning of that capital very thoughtfully is really, really important, given the speed at which humanity needs to change, and as a result, industry and then voluntary carbon as a subset of that, to meet net zero targets, to achieve anywhere close to what we need to achieve by 2050. I think that's really, I'll leave the last 8 minutes for questions. I think that's, for us, we could talk a lot about valuation and where markets are in general. I think there's a real big gulf, again, between the size of the market that people see, the amount of focus that some of the largest corporations, capital allocators in the world are focusing on voluntary carbon, versus the actual, I won't use market cap because there's very few carbon focused businesses like ours that are publicly traded, but just the overall aggregate market value, however you want to approach that, of the voluntary project side of the market, even giving account to some of the very splashy private market transactions that have happened recently. So there will be an adjudication of that as well. And for us, it's sitting there in the middle of it and being able to, as I said at the beginning, to be an important part and a cornerstone of closing that gulf is, we think it's necessary for industry. And we think it's incredibly interesting as people and professionals to be part of that building an industry. How often does that happen? Virtually never. So we think it's a once in a lifetime opportunity. We think it's a once in a lifetime necessity for the planet, for our species, and for the industry. So with that, I'll open up to questions.
Thank you, Michael. Questions?
Hi, Michael.
Hello.
I have a question related to the voluntary carbon markets that are already set up and structured, like the London Stock Exchange's voluntary markets, and how are they different from what you're doing, and what are the ways that contracts are listed? And they've got multiple ways that people can trade. So
great question. And so I've got 6.5 minutes left. So if you guys allocate me the rest of the afternoon tomorrow, we can have we can open the first page of that. We can open the first page of that tome. I think that the first thing that I'll say, and I said before, but I think it's worth repeating, there is no carbon market. Like, it is not, we've not commoditized. There is no market. There's at best an OTC market, and it's the upstairs market of the OTC market, because it's word soup acronym out there in carbon. And I worked at Goldman Sachs. We had lots and lots of acronyms. The acronyms in carbon are, far and beyond there. But to your question, I really think that I won't speak to, this market or that market. You have registries. Everybody's familiar, or most people, I'm assuming, in this room are familiar with the registries. We work very closely with Vera for our projects. There's, Gold Standard is obviously great. And Pure Earth is wonderful. There's a handful of others that are emerging. But for us, it's really about, to bring it back to the risk standpoint in the market, it's about, where's that offtake? Who is the buyer? So I can produce anything I want. I can go say I'm going to get it registered on this registry. I can even get it registered on that registry. But I think what you've heard repeatedly from various companies today, you heard it from Abex, is that we believe in market-based solutions. And I think it's not just we at Base and as an extension at Abex, but I think that, if I could be as forthright, like, it sounds like a lot of the room believes in market-based solutions. That's why we're all here. So for us, it's, what'll the market bear? So a real world example is on our Vietnam household device project. We were working with Citibank. Citibank is our off-taker. And we went out and worked with high credit quality counterparties, people that we've worked with before, people that are trustworthy. That is the market to me. that is a real market where a buyer and a seller come together. So we can have all the big discussions around, and not to minimize what Abex does, of course, we can have all those big discussions. They're really important, and we'll get there. But I think for base being just a simple, humble commodity producer, it's where does somebody buy something, and it's testing that market and testing it in size that it's not going to blow up your business if you're wrong about your thesis. And I think that reality is something that needs to be imposed on markets in general as you transition from not commoditized to commoditized. Because once you get there, then you can just go to your local friendly Abex exchange and sell what you want to sell on their contracts.
Hi, Michael. Thank you for sharing the insights. This is Vinod from Ozone Climate. We focus on NBS solutions in Asia. What you said resonates the ground reality. Two quick questions. One is, do you also get into the project development role in the projects that you are getting into, or it's just only the capital allocation? Or do you have and the second question is, do you have a direct team in Asia? Thank you.
Thank you for the question. And I think it's a really, really important question. And for us, being nimble is really, really important. So, in my old capital allocation days, we wanted to be capital structure agnostic, industry agnostic, risk reward centric. Within voluntary markets, we view ourselves the same way. So we view ourselves for our project in Southeast Asia. We view ourselves as developer, but we're not on the ground planting trees. We're not on the ground just doing the community relations. We have partners on the ground. So I view it not as this binary, are we a developer or are we not? It's, there's an ecosystem element to it. And so within Shades of Gray, how deep are we going into the project development? But generally speaking, we're always going to have an in-country partner and developer, even if we have relationships with the government, even if we have relationships with the various stakeholders in the region. I think that we're in a world where you have to have in-country relationships, and you have to have, again, to the patchwork that I talked about before of what this industry is as a whole, and voluntary carbon specifically, you need to have partners. This is a team effort. So it's that's not meant to be a wishy-washy answer, but it's really, I don't think it's one or the other. And it's a question of how much of an intensity and how deep do we go in the development side. And I do think that as our business develops, there'll be more development expertise. We have development expertise on balance sheet now, but it's a question of capacity and specialization. As you have the economies of scale, as a business develops, as this marketplace develops as well, you can start to go into the tails of specialty and bring those people onto your balance sheet, but still having that connectivity in the jurisdictions you're operating in. Thank you, everyone. Thank you, Peter, again.